Hello, 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 hello. I hope everyone's doing well. And for those that celebrated Thanksgiving, I hope you had a great time. And if you didn't, hey, hope you had a fantastic day. But I want to give some updates here and basically say that I'm kind of done with meme stocks. It continued to go down, both AMC and GameStop. So I hope they do well, but I might trade them a little bit. I'm not gonna play options on them anymore. Definitely not, because it just never seems to benefit me when I try calls. So, which means that it'll probably go up 100,000% in the next few weeks. GameStop earnings got pushed to the six, so um, so that's an earlier release. Could be great, could be bad. Who knows? But I want to look at SPY and I want to continue to look at um, blue chips and overall just, you know, stocks that actually, abide by logic and have a structure of solid fundamentals. But, so, to start, you look at the S&P 500 and this pattern. On the left, you have the top of SPY before the 2008 crash, and I want to give a shout out to a friend of mine, screen name Buddha on Discord, because he was the one that showed this to me, and I'm very happy that he did. This I feel like it's okay to show because it hides the master sequence, but it still shows the pattern. And I want to make some points about this. So, right away, you'll look at this and you'll know that, well, the bottoms here are different, but they are very much similar. And it's kind of an emphasis on the idea that fractals, you know, they they're not one to one. And I'm sure that there was some micro reasoning for dropping this low, but I can't go back this far on small time frames. So we're just gonna have to look at the macro scale of it, and I'm sure you can already see similarities, right? So we have the drop to kickstart the pattern, right? Just like the COVID crash, and then these this triple bottom here, you can't see too well on this, but I think right here, if you can even see that, you see these three lower lows that were made, just like this, right before hello. What the heck happened? Oh boy. Um, it's not letting me move. All right, I'll just redo it then. So I'm sure it's already clear, but so these tops, we're going to assume that they're similar, and you can see that the top or the whole sequence finished with a higher high. So we can kind of assume that SPY is going to go above 467, which I, expressed in other videos where I said it would go to all-time high. Now, what's a little difficult about this is if you take off contractual adjustment, so if you go to the actual chart, the top is 479.98, so basically all-time high would be 480. So whether or not SPY wants to go above this point, that's to be seen. but it all depends on how fast it goes above the adjusted all-time high. And I think that if it goes above 467 this week, that we'll see a pullback, you know, the following week. And then the week leading up to FOMC, we might see a push higher than 467, maybe to go to 470. I'm not too sure about 480 though. It's really to be seen. So, you know, looking at this again, we have, now I don't really know where this would be. I'm sure if I scale it differently and I went to, like, you know, the 4 hour on the left is the daily, on the right is the weekly. So, you know, presently it's a lot longer, but it's not really a big deal. So where I think we are right now is, you know, this section right here. And I'm thinking that this upcoming week is going to be pretty dang bullish. I think we're going to probably see maybe 5 daily candles, just green, non-stop green. And I'm pretty excited. I'm playing Microsoft right now, and I'm thinking that it's going to make all-time highs as well. It's, you know, not that far. I have 380 calls. And the technical analysis that I'm working with right now is this ascending triangle with the start of it beginning over here. I think this was, yeah, this was before the OpenAI news. So the OpenAI kickstarted the pattern, and you can see that the top was formed on this 379.80 level. At least that's what I think, right? Because there's 4 rejections here, and we have higher lows. So I'm thinking it's just going to be a green day on Monday, and not too sure how. I don't think it's going to test the top of this, you know, of this channel on Monday, because GDP report is on Wednesday, and then PCE is Thursday. So regardless, you know, it could just do this. You know, that's fine. That's totally fine. And then on GDP report, maybe then it goes to test the top of the trend. Either way, it's going to be mad bank. Okay, so I'm very excited, and also a little nervous, because if this doesn't hold and this just drops, oh yeah, it's GG, boys, it's GG for sure. So that's just kind of what I'm looking at right now. Really short video, nothing else to really say except kind of going back to SPY actually. So keeping in mind this pattern, you'll know. So after this plays out, right, you know, it drops below this point. So it's going to come up, and then it's going to come down like this, right? Well, at least it should, in theory. And this is the end. So I don't, you know, in my mind, I believe that I think the market is just going to submit itself to the FOMC meeting. So every FOMC is kind of how the market will time itself. So on FOMC, it's gonna make this drop. You know, it's gonna make the drop, and then it's gonna bottom out the next FOMC, just like it did here. And it's going to continue to do this for a while. So, you know, after this retrace, when it made a new low and it comes up, you know, it comes up to this point. If the 2008 played out, then it would, you know, it would come down really far, below this, whatever this low was. However, in the master sequence that I believe is valid, when it comes up to meet this level, so FOMC they'll raise rates. The next FOMC they'll probably pause because I don't think they have the goal to cut, and I don't understand, like, if you're gonna make the decision to raise rates and drop the market 20%, you're really gonna come out and say, wait a minute, yeah, our bad, let's cut. No, they're not gonna cut here. What they're gonna do is they're gonna pause. It's gonna come up. It's gonna retest this level. Right, so it's basically gonna be the pause range, and then it's gonna go sideways until the next FOMC where they decide to cut or pause or whatever. I think they'll pause again. They'll say no more raising. We're gonna pause, and the market's gonna go up. If they pause or they cut, I don't think they will cut. I think they'll just pause again. Pause or cut, it's bullish. It'll cause the market to go up, which would then invalidate the 2008 crash, and it would play out the bullish iteration, which is essentially just this run up again. So, it would just do this, and then a bull market would initiate for another 1 or 2 years. If they raise rates at this point, then the 2008 sequence will play out, and then you can go back and you can just track this. You can track this how you want. But, historically speaking, if you go back, the 2008 crash, when it started, really, the Fed cut rates. Actually, if you go to a lot of crashes in history, you'll notice that the Fed were cutting during the downtrend, right? So the money has to be made at these, right? The money has to be made here, and then you should have enough cash to survive throughout the decision of this period. Right? Like, you remember, I'm not sure if you do, but the brutal CPI sideways where the stock was held into a 1% range all the way back here. I didn't realize it was that far. There was this range right here. It was a 1% range. Like, every time it came down, touched the bottom, you just buy calls, you instantly win. It's so easy. CPI decision, or the report came out. It was bearish. It dropped hard, right? So I think that's what is going to happen here. But if they cut, it's if they cut, it's bad, technically speaking, or historically speaking. If they raise, it's bad. So the only thing that they could do to initiate a bull market, in my opinion, is if they pause again. So they double pause. And so that's really what you want to keep in mind here. And what's really exciting about this, honestly, is if a bull market does happen again, then you can honestly, like, small caps, think about it. Really think about it. I know I hate memes now, but something might happen here, and the excuse could be, the Fed saying they're going to pause again. The 5.75% funds rate is really good, we think. Blah, blah, blah. And the sentiment just carries the entire market. So, really exciting period, but nonetheless, like, this period right now is where money has to be made, because if you miss out on the drop, then it's gonna suck, because you don't wanna start chasing or trying to come back during that sideways period, because that'll be pretty brutal. So stuff to keep in mind. I think yeah, I'm thinking that the market just generally, it looks pretty good, and small caps continue to elude me, but there's a lot of articles coming out saying that small caps could see a bounce. So we'll see. We'll see. That's it. Short video, nice. So I hope you guys do well in the week, and until next time, peace.